Hey guys, welcome back to the channel. Hope everyone's doing okay. There's like a heat wave in the U.S. As I record this, and it's really brutal. So I hope everyone is okay. So I wanted to try something a little bit different. I wanted to see how centralized exchanges would do against a decentralized exchange. I kind of had a feeling that, like upfront, that the centralized exchange would do a lot better. In this case, I'm using Uniswap because it's one of the biggest ones. Um, and, even then, it's still relatively new. I believe it came out September 2020, and already it's outperforming the old legacy centralized exchanges. So I wanted to compare like a few of them. So let's start with the CBOE options exchange. Now, it's hard to do like a direct comparison because obviously, you know, the CBOE is an options exchange, but it is centralized. And I wanted to get an idea of how like the how the returns would look like. And right now, like in decentralized finance, it's hard to find like a similar metric. Um, but let's compare them like one at a time. So I'm taking like this information directly from Yahoo Finance. Depending on when you read this, some of these numbers might be a little bit out of date, but you can easily look this up on Yahoo Finance yourself, just to in case in the future you want to kind of see how the numbers update like every quarter as they report their earnings. You could do that yourself. But just to give you an idea, like right now, the SIBO, it is publicly traded, and the yield is, almost 1.5%. So not that exciting. And then the overall return on assets is only 7%. And I thought this would be a little bit higher given that there's a lot of I guess like so-called ape traders or like newer traders, and you know they're just like trying to learn at the same time. It was very speculative, so I thought the return would be a lot higher, but I mean it is what it is. And then the next thing, somewhat related, is the CME futures exchange. Um, and then again, like it's in the same like ballpark. Like the dividend yield is only 1.68%, and the return on assets it's surprisingly low. This really shocked me because everything's it's mostly electronically traded, so I thought there would be like some cost savings. So like for shareholders, like this is not good. I mean, we're in probably like one of the best times for speculative markets, and it's only returning 1%. So I mean that's really bad. Um, and then going next, this is Coin. So this is Coinbase, and um, I kind of hesitated a little bit to include this since they're still pretty new. Like they've only recently had an IPO. But like their recent quarterly earnings, like the revenue was doing very well. So that's not that surprising. Considering we're still kind of hopefully in the middle of a bull market. So hopefully there's a few more months of upside. But anyway, like they don't pay a dividend. But the return on assets is pretty good. Well, at least for a stock, at 16%. So this is probably one of the yeah. If you had to invest in a centralized exchange, Coinbase would probably be one of the ones to go. Um, and I guess I shouldn't be surprised. I guess anything that's related to cryptocurrencies are doing quite well. And then meanwhile, like the legacy type of of exchanges of like like TradFi type assets, or they're not. I guess people are getting bored because of like I mean, look at this, like the dividend yield, and this is like the um the ICE exchange, which is like the owner of the New York Stock Exchange, and this is like one of the most I guess like iconic like stock exchanges in the world, and the dividend yield is only 1%. Um, the return on assets is only 1.48%. I mean, this is really ridiculous. And then here is a MarketAxess. They're relatively new too. Um, so they're an electronic bond exchange. And again, the dividend yield is not that exciting, but the return on assets is actually pretty good. There's actually well, I guess depending on when you update the figures, the return on assets is actually pretty decent at 18%. So then the next one I wanted to show you like the decentralized exchange. Now, the data I took from Token Terminal, um, and then obviously they don't really pay out anything on it's since it's not like a stock. There's no yield to speak of. But the return on assets is pretty good considering that they're pretty new at 20, almost 21%. And the reason why I put an asterisk here is because like it's not like it's not like they have like equity or like traditional assets. So I kind of use like a annualized revenue divided by their total value locked to kind of get an approximation on return on assets. Um, so again, like you can feel free to go to the token terminal yourself to get like the latest numbers to kind of just like also check my math as well. Um, so yeah, I'm really disappointed at like how bad like the centralized exchanges. I mean this is pretty. Aside from like market access, like the bond exchange, the returns are pretty paltry. I guess like a case could be made since like for example the ICE, CBOE and CME they have if you wanted to boost your returns, what you could do is you could sell like options on like the stock itself to kind of juice your returns a little bit. So there is that. If you decide to, for whatever reason, you want to stay in the TradFi space for a little bit longer for, I don't know, like maybe you feel like the diversification benefits might be good for you, but I mean, again, that I guess everybody has to make their own decisions based on their own risk tolerances and their own risk preferences. So, but for me, I'm really having a hard time justifying keeping, um, like these legacy type of assets. I mean, I guess Coinbase and MarketAxess are probably the way to go for at least for a little bit. Because at some point, even those that have like a decent return on assets, eventually a lot of that money is gonna go into like something like a Uniswap, or even if it's not Uniswap, there's other decentralized exchanges like SushiSwap, Curve Finance, yeah, you name it. And they're just getting started. Like for example, who wants to really buy like bonds unless you have to? Like maybe you're like a traditional uh like bank, or maybe like a hedge, like a old timey hedge fund, or one of these like sovereign wealth funds where you can't, like maybe you don't have the legal mandate to like buy cryptocurrencies, but for like like for an individual investor, like it's, to me it's hard to justify, especially like market access is the last time I look is like between $450 to $500 per share. So, if you wanted to trade like an option, you're just talking about like $50,000 worth of product. So from a capital efficiency point of view, um, yeah, I mean it's tough for a lot of like smaller time investors. So again, just to go to the caveats, it's not a clean apples to apples comparison because like Uniswap doesn't have like a real like equity base. I guess you could make the case that the Uni token, like that, since it gives you voting power, it's sort of like a equity, but not really. And I'm looking from a little guy investor point of view. I think for most people it's a little bit easier just to start with like $100 to maybe like $500 at a time, especially if you're working a normal job and like you only get paid like um, depending what job you have, like you're paid either weekly or bi-weekly, and to not everybody has like $50,000 to like kind of throw around on, like especially some of these older stocks. They're quite expensive, and the only way to get more yield is to kind of sell options, and not everybody is comfortable doing that. I mean, Uniswap, um, you could just buy it outright on like a uh, on like Coinbase or like Gemini or whatever uh, centralized exchange, like fiat on ramp that you choose. And I know like Ethereum gas prices are kind of high, and I'm really hoping that um, I know that Arbitrum is supposedly going to come out later in August. They've committed to a August date, so it'll probably be August 31st. Um, um, so hopefully that'll give some Ethereum gas fees a relief. But anyway, back to the topic at hand. In terms of which is better, like to me, it's a no-brainer. Like these centralized exchanges, well, maybe like the exception of like Coinbase, like they're generally pretty stodgy. I just can't see them like changing anytime soon. Some pay dividends, and there's the higher barrier to entry because like the per share, like the stock price is pretty expensive. Um, so that's again, I'm having a hard time like justifying why you'd want to hold on to like a centralized exchange. You know, unless you're maybe like a big time investor or like a hedge fund or something, it's hard to justify. The decentralized exchange, it's the new kid on the block. Um, it can be risky, but but I guess it depends on where you choose to invest. Like, for example, Uniswap has I believe like they've been around the longest. Uh, Again, like I guess like someone could probably fact check me. Like I believe they came out like September 2020, and they're already on version 3. So they keep like improving their services. And over time, I, well, actually, it's already outperformed like the centralized exchanges, with maybe the exception of Coinbase. But on a return on assets point of view, like it's already better. And I expect the performance of like say Uniswap to continue to improve, especially as they're currently on the Optimism Layer 2 mainnet. It's considered like an alpha release, but if you want to like save some money on gas fees, you can go that route, or you could just like wait for like the Arbitrum mainnet and see which one does better. And the exciting part about like going with a decentralized exchange directly, you can be like a exchange member, which is pretty exciting. So, like for example, even though you can buy the stock, you're not actually getting like the actual lion's share of the revenue. I mean, you have to rely on like dividends in order to kind of receive like monetary benefits from um like say for example like a New York Stock Exchange. Um, you can actually make more money if you're an exchange member, but like that again, it's expensive to become an exchange member. Like most individual investors won't be able to afford like a seat on an exchange. Whereas like with Uniswap, like if you become like a liquidity provider, you're directly getting benefits like any of those swap fees like directly to yourself. Whereas like again with like a centralized exchange, you have to let's just say that you are a just a stockholder, you kind of get like leftovers basically, like this dividend yield. Like the business itself gets like the actual revenues and the profits, and then like you're getting it indirectly through like dividends or like maybe stock appreciation. Um, and then like you can also like indirectly get it from like trading options on like the stock itself. But like yeah, I guess like you don't have to go through all that with a decentralized exchange. Like you don't have to go through a broker to buy the stock. You can just um, put your money to directly with the Uniswap protocol. So like in my opinion, like the centralized exchange is the way to go. I mean, you're getting monetary benefit like directly. Um, so that's just my 2 cents. I'm hoping in future videos like I really want to make more like practical uh like ways to make money directly with like stuff like Uniswap. So hope you enjoy this content. Please consider giving it a like and subscribe. And share it with people that maybe like especially people that maybe a little bit older, like they still they're still trying to like get like decentralized finance, and why like this is so important to kind of understand why like you would want to consider like putting your money to work in a decentralized exchange. So hey, thank you for watching. I appreciate the viewership. Um, Again, if you can like and subscribe, that'd be great. If you guys have any any topics or like a protocol you want me to go over, maybe I can do that in a future video. So again, thank you for watching and have a great one.